Hello, traders. I've been working all week, and quite frankly, I haven't even had time to even look at the markets intraday. So I am missing out on most of the action this week, and it's about to kill me. Uh, we're just having a serious labor issues trying to get people. We're spent more this year trying to get people to work for us than we ever have in 40 plus years. We just can't find help for nothing. It's ridiculous. Well, at any rate, on the health of the markets, I'm going to start off looking at the market breadth, and I'm looking at equal weighted ETFs for the S&P 500 and the Nasdaq. And this is kind of what we got setting up here. We're right back down to this danger zone for the uptrend. I consider these zones up here the Momo areas, each one of them being a higher momentum zone. And then once you get down in here, you're threatening a trend change down in this zone. And we're right down here testing it, and we're below the 50-week moving average. So it's never good to be closing the week out below the 50-week moving average. It's not a bullish sign at all. So it's typically what you do when you're closing below the 50-week moving average, you get continuation. Okay. Uh, every now and then we've found some responsive. It's held in the past. Okay, down here, but we all know how extremely extended the markets seem to be right now. So just keep that in mind. Lots of danger. You know, uh, we're looking the next real support area could be this breakout area right down here around the 82, 81 area. So that's another 20% lower on the markets if things start to pick up. Now, we do have a lot of NASDAQ stuff hitting the market next week. Uh, uh, Google, Amazon, I think even Microsoft reports next week. At any rate, I got two different time frames here. This is the long-term time frame, and we're still in a very solid uptrend on market breadth for the NASDAQ. But this is an equal weighted view of the NASDAQ. What we are doing as of this week so far, we're crossing out of the short-term momentum uptrend. So we are potentially going to get a further fade in the Nasdaq here if this price level holds, and we're also below the 50-week moving average. So that's not a very good situation either. The FDN, which is your internet ETF, so far we're holding the 50-week moving average. We closed right on that today. So we'll see what happens. Netflix was what I called out as one of the most bearish charts for the FANG stocks, and Facebook is right behind it. Both of them I see continued selling the rest of the quarter probably. So, but Amazon's also got an extremely high valuation, and if there's even a whiff of some weakness in the markets, uh, yeah, Amazon could come down just to reset to lower price multiples. Just keep that in mind. Now, the reason that I looked at the equal weight, if you notice, the equal weight is below the 50-week moving average. The SPY itself is above the 50-week moving average. So, in my opinion, market breadth trumps the primary indice. Okay, so just keep that in mind here. That I see a lot more bearishness on the equal bet weight than I do on the SPY itself at this point. And then also on the QQQ, it was below the 50-week moving average too. And look, uh, we're still well above the 50-week moving average on the primary index. So that means that uh, this is actually showing up right here that just a few of the FANG stocks are holding in a little bit better to support the QQQ versus the equal weight NASDAQ. Now, I don't know if this trading view has an error in their charts or not. They were talking about how the Shanghai Composite had broke some critical levels of support this morning, and I just couldn't find it in my charting. But at any rate, we're crashing down here through this to this fin fan, and we closed right on it today. And the relative speed that it came crashing down here suggests to me that we're just going to blow right through this and come all the way crashing down to the 2000 area. Like I said, almost 500-point drop from here on the Shanghai deposit. I don't see any real support here, and it's like I said, the relative speed. I think it could just it fall apart here, real quick. Okay, some things I want you to see. Your transports, um, your IYT, they are the backbone of your industrials. Okay, and look the handle we're putting in right here for this week with one more day to go. This is not a pretty picture for the transports and the industrials going forward here. So just keep that in mind. Lots and lots of risk. I see us coming crashing down here. Um, I don't know if it'll start tomorrow or not, but it's not looking too pretty in my opinion right now. And then if you want to look at your industrial ETF, XLI, we are below the 50-week moving average on the industrials. So that's not a pretty, and we have breaking this fifth fan zone. And this, in my opinion, is a lot worse situation than what we had the prior time on this sell-off. Now, it's only the first week here on our materials, XLB, but we are crossing into the midpoint of this uptrend. This is a long-term uptrend. So we had the potential, we're crossing into a more bearish stance on our basic materials with what's going on in China and the global markets. So keep that in mind. Basic materials this week seem to be turning bearish. Your XRT, your retail sector, it has crossed the midpoint of the bullish phase that started way back in October of or August of last year, August, September, last year, and we are below the 50-week moving average. So this is looks like a lot of selling pressure coming into retail. Your semiconductors, which are critical to save your Nasdaq, that's the and your technology sector. They are the bones behind the whole technology space. And as of right now, our intermediate phase is in jeopardy. We are currently we closed today right on the midpoint, mid fan, 50% fan versus bullish versus bearish. So just keep that in mind. And we are rolling over with below the 50-week moving average. So not looking too pretty for and we broke this consolidation zone. So a lot of things going against the semiconductors here. Now, one thing about the SMH, what might be the bottom for this market here, that's the 100-day exponential moving average here. And we are in striking distance. We could do that in one day, maybe even tomorrow. Come down here and just tag this 100-day exponential moving average here. And I wanted to go back real quick and show you where the 100-day moving average was on the XRT. So that gives you a pretty good benchmark exactly where the retail sector is headed. I still don't think IWM's come down far enough and retested support levels. I think it's definitely going to come down here and tag the 100 EMA. And then some other charts I want to point out here. One very important one here is the Dixie. That's the dollar index. And according to my charting, the Dixie is about ready to break out here. So just keep that in mind on your charting and stuff. Well, I moved this that way. Give me a second here. Yeah, I had it off a little bit. Yeah, Dixie definitely looks like it's trying to break out here. And then I want to finish up with the TNX. And this is interest rates. And I see all kinds of risks the interest rates are going to catch a significant bid here. And I want to also point out that China tries to keep the yuan in parity with the US dollar. Okay. And right now, the yuan's weakening plus the dollar's climbing, and it's causing a massive spread between the currency pair. And the only way China can alleviate that spread is to unload treasuries. Okay. And that's it. They mentioned in August a bunch of treasuries that they unloaded. Okay. And what that's going to do, if they unload enough of them, it's going to really drive up interest rates. So just keep that in mind. And the parity is we're at extremes right now. I mean, we're at a point we might here in the next week or so see all-time discrepancy between the yuan and US dollar if they can't get this if the currencies don't line up a little bit better here. And I can see in the coming weeks where the Trump administration is going to blame them for currency manipulation and stuff, which honestly, I don't think that's the case. I think they are unloading treasuries, but if they start unloading the treasuries at the rate that they need to, it's really going to probably start driving interest rates up real quick. Well, that's all I got to say, and good trading. And if you haven't noticed, I got a bearish bias. It's hard to say if tomorrow will be up or down, but I'm thinking based on my charts that we're going to see some critical breaks on some of these sectors tomorrow. So good luck and good trading.